This is not financial advice. I'm recording my thoughts about Enphase Energy. In the past 5 years, this stock grew by about 10,000%. In other words, you would have 100x your money if you had invested in this company 5 years ago. But today it's trading at about $219, and I want to evaluate this stock and see if this is a good buying price. Enphase Energy calls themselves an energy tech company. They make micro inverters for the solar panels, and they are not complacent. They are constantly innovating their product and keeping that differentiation from other manufacturers. So we cannot name too many competitors in this space with Enphase Energy. So we can say that they have a good moat. Now let's move on to the evaluation. We cannot do an evaluation without looking into their financials. Recently they released their Q4 2022 results, and for the whole year they made about $2.3 billion of revenue. In the past financial year of 2021, they made about $1.4 billion. So that's about 70% growth in 1 year. And they are also profitable. So they do have a positive net income and a PE ratio. Q1 of 2023, they are guiding for $700 to $740 million of revenue and gross margins just north of 40%. This company has $1.6 billion of cash in the reserves. So therefore, even though they give stock-based compensation of about $70 million a quarter, they can always buy it back, and there is no need for them to dilute the shareholders in the coming quarters. So let's look at their evaluation in 2027. That's 5 years out. In 2022, we know that they made about $2.3 billion of revenue and grew their revenue by 70%. But for the next 5 years, I'm going to assume an average 40% growth rate for this company. I do recognize that solar is just getting started and there's a lot of room for growth for Enphase Energy, but at the same time, as the company grows bigger and bigger, it's harder for them to grow. So even 40%, in my opinion, is optimistic. So I'm going to assume 40% growth rate in the next 5 years, with which they would make about $12.4 billion in 2027. And since their gross margins are in the order of 40%, their current net profit margins are 18% in one quarter and 12% in one and 15%. So they're less than 20%. But as they achieve scale, I'm assuming that they can get 20% net profit margin, with which they can make about $2.5 billion of net income in 2027. A company that's growing at 40% year on year and have a net profit margin of 20%, I can safely assume a multiple of 30. So with a multiple of 30, they would be worth about $74 billion in 2027 based off of fundamentals. And like I mentioned before, this company has $1.6 billion of cash, and they offer stock-based compensation, but at the same time, they can buy it back easily because it's not too much as a percentage of the revenue. Therefore, I'm assuming that there will not be any dilution from this year onwards until next 5 years. So based on that, the 2027 stock price would be about $508. But wait, they are at $290 now, right? So that's about 130%, more than 2x in 5 years, which is an attractive gain. But the assumption of 40% growth rate has to be valid for this case to work. And for the bulls out there, I made another case where I'm assuming 50% growth rate in the next 5 years. For my own investment decision, I'm going to base it on 40%, but for the bulls, I'm doing 50% revenue growth rate in the next 5 years, with which they can get to $3.5 billion of net income, and I'm still keeping the same multiple, 30, with which they would be worth about $105 billion. And I'm going to have the same assumption here that they are not going to dilute shareholders. So the share count would be about 146 million, even in 2027, with which this company stock would be worth about $718. The current price is $219, right? So that's about 228% gain, or about 3x the money in the coming 5 years, which is a great gain. But again, the assumption of 50% growth rate has to be valid. In conclusion, I think Enphase is a great company that is constantly innovating to keep its differentiation from its competitors. And it also has great financials and great balance sheet. But at the same time, for my personal journey, I'm looking at a 2x in about 5 years with an assumption that they can grow at about 40% year on year. But if the transition to solar is slower than expected, then they can come out and say that they cannot grow 40% year on year, making this valuation invalid. So when I have uncertainty like that, I need a higher reward. In this case, I probably need about 200% or more so that I have a factor of safety from the 2x that I'm anticipating. So overall, I feel like I can buy this stock if it falls below about $160 because that will give me a 3x with some safety factors. Because I keep this factor of safety for risky companies like this, I can still get 100% gain even if things do not go as planned by Enphase. So in conclusion, I would buy this stock if it falls below $160.